You struggle with emotion and you haven't got an ICT entry model, forget ICT and just follow fair value gaps. So we saw a fair value gap over here. You can see price eventually held and broke it to the downside. If you're frustrated with taking losses, you can just take the flip zone of the fair value gap, right? So the reason this fair value gap failed is that when we go into this candle, we saw these aggressive buyers step in, but these aggressive buyers were not rewarded because these aggressive buyers went from high volume down to low volume. And it was actually the aggressive sellers that broke the zone. So when you see aggressive sellers breaking a zone, or you don't see aggressive sellers being absorbed, what that means is the zone is going to break and you shouldn't be buying from there. Instead, what's actually happening is we see a large green candle over here, but the market had so many aggressive buyers. In fact, when we look over here, we see 422 for 187. So there were so many more aggressive buyers after the market broke to the downside. So with that being said, you're better off taking short positions from this area, targeting this area. Now from here, this fair value gap held. Now when we look carefully into this fair value gap, what actually happened is price rejected the fair value gap and we had a massive aggressive buyer over here despite the candle being red. We also had a green candle, but the majority of the candle corresponded to aggressive selling. In fact, we had aggressive sellers down here and we had more aggressive sellers over here. This is what gave us the move to the upside because we had saw aggressive sellers failing at this level, and this is what gives you the move to the upside. So whenever you're looking at fair value gaps, you always want to read the buyers and the sellers inside of every zone if you want to make proper trading decisions.